Welcome to Saxo Bank's morning call on Tuesday, the 12th of February. We had a massive session in risk in equities overnight in Asia. We had Chinese equities up 1% more, on the backdrop of 1.5% yesterday. But most surprisingly, Japanese equities rose 3%. If you look at the chart here, it was a monster session. We had that, 2 or 3 last sessions that seemed to, suggest that we were rolling over in equities, and now we're getting this massive risk-on session. We're up 1% in the DAX futures. We'll get to that in a few seconds with you, Kim. But as you can see here, it all happens on Trump's trade comments, where he indicated that the Chinese wants a deal fast, and he probably also wants to have a trade deal fast. And also, and the most interesting thing about this whole US-China thing is that China is sort of really hurting here. And it seems almost too easy if Trump wants to go out and make a trade deal now, because he probably, the difficult part is the forced technology transfer and the intellectual property rights. So let's see what happens. But equity markets up 3%. We think it's going to be quite short-lived. There is definitely some macroeconomic indicators, leading indicators, that are suggesting that the picture is looking more gloom and doom. But we'll get back to that in a few minutes. But let's talk about the DAX, because the DAX futures are also up 1%. But there is definitely a more bearish signals coming out of the index. Kim, take us through the chart.
Yes, as we can see on the chart here on DAX, it actually entered into bearish territory again, with taking out the lows from last week. Of course, 10,785 is crucial to have the confirmation. But correct, yeah, we up 1% here, pre-market, or the future is up 1%. I think it will try to crawl back up towards that. You can see that rising trend line I drawn there, it broke late last week, but I think it will fail. And interestingly, I also checked the Nasdaq future this morning. It's only up 0.6%, yeah, so it's not that strong.
No, exactly, and that's basically our overall theme here, is that we are structurally in a macro weakness, but everyone is just zooming in on this whole trade deal. And the big question is whether how big a deal this trade deal will be. I mean, we're putting the most odds on a sort of a slightly disappointing trade deal, where they get the nose and butts and nose on specifics like soybeans, etc. But it won't be this master deal. But yesterday we had an important news coming out from the OECD. If you look at this chart here, it shows the global leading indicators, and it's updated now for December. It hits the weakest level since October 2009. As you can see here, the growth in the global economy is below trend growth, which is below 100 on the index level, and it's still, the first derivative is still negative as well. So the growth is slowing down. This is obviously not a very positive sign, although there are signs in the individual country indices that South Korea might be turning in January, but it's still too early to say. This index indicates that Q1 macro numbers will continue to be weak, and overall we have a heightening risk that we will enter a global recession this year, unless the policy measures carried out. And that's also why we're saying be a little bit cautious here on trading too positively on the trade news. There are bigger issues out there. We have talked about that extensively for months, with the housing slump, slowing credit transmissions, etc. It doesn't look that rosy. And just to build the argument further before we jump back into the Nasdaq chart here, you look at the US Small Business Optimism Index from January. It's just basically contracting very fast now. It has shredded almost 8 index points, coming down towards that 100 level. This doesn't really look that pretty. I think there's more and more news coming out, increasing bankruptcies in the US agricultural sector. They're feeling the pain now from this US-China trade war. And it also looks like the US economy, at least from the small business optimism side, is rolling over. And as you said, Kim, we're only up 0.6% in US equity futures. We have come a long way already. We've probably recouped half of the losses from Q4. Yeah. But what do you look into, or what do you see in sort of the US equity market here, or the technology stocks?
Well, I think we will still see and it will be, of course, based on this new positive news coming out here. So I think we will have another go here on the Nasdaq 100 if we can get the chart up. Then we'll have another go at trying to get up to this 7100 level that are drawn there on the just above the 200 moving average, which is represented by the red line. I don't think we will break it, to be honest. But it's still early days. If we break it, well, then there's more upside potential. But thinking about looking at all the European markets, which they are all struggling.
Exactly.
And also looked at the UK 100 this morning, and they are all struggling. So there's this decoupling between US and Europe, and it's been for quite a while actually, and I think it will continue.
Absolutely. And so I think we'll probably get the test today, right? If we're up 0.7% in the futures, we will likely get that test of the 200-day moving.
Well, that's around what's just below 7,000 on Nasdaq, so very close to it, yes.
Yeah, and coming back to the European equities, I think it was quite interesting to see Bob Prince, the CEO of Bridgewater Associates. He also specifically mentioned, and they have a pretty solid track record at Bridgewater Associates, he mentioned European equities as sort of the market to focus on for global investors, because if the global economy and the market are turning higher for the sustainable, then you have to look for European equity markets. And right now it doesn't really look that positive, specifically Germany, just to mention one index.
And what we also should think about that most people haven't recognized, about half that most of the European equity markets, they never recovered from the financial crisis. No. If you look at a historic perspective,
it's true.
So it's only some of them, like Nasdaq, that actually made an all-time high in late last year, but most of them never did that.
No, exactly, and we have a banking sector in Europe that has never really, maybe it's actually almost flat for 20 years. Yes. If we have two calendars, so if we go to the first calendar, the earnings calendar, I mentioned it yesterday. Today we have Baidu, they will report in the US session. We have American Mobil, Occidental Petroleum, and then we have Kering. Kering already reported this morning before the cash open here in Europe, and as you can see here, highlighted with a red rectangle here, growth among Chinese clients extremely dynamic in fourth quarter, according to the CFO in the press release. And I think that's interesting nuggets coming out of China. It basically means that the situation is not in free fall yet, but the situation is very dynamic and it's fluent and it changes very rapidly. I think this is just another evidence on the ground from Western companies operating in China, confirming that the outlook is quite negative. And then I wrote yesterday an earnings watch, as we do every week, and I zoomed in on Baidu, so you can read my preview on home.saxo under my profile. But I also highlighted Airbus, and then I dwelled deeper into Nvidia and talked a lot about what to expect from Nvidia, because they have really been hammered quite hard on their stock price because of excess inventories and collapse in profit margins, and the market is very, very skeptic of the earnings release. I think the earnings per share are expected to be down 50% and revenue down 20% year over year. If we look at the macro calendar, it's very light today. We basically don't have any major news that typically move the market. I think the Westpac consumer confidence in Australia might be interesting because it's a February number, so it's very early days here, and we know the Australian economy is struggling because of their deep link to China. So I think this consumer confidence number could be of importance for the Aussie dollar, but also the Australian equity market as a whole. And we have some India CPI numbers for January out here later today. And otherwise tomorrow it's the Swedish Riksbank and the RBNZ, which John covered in full yesterday. You go watch our replay from yesterday's morning call if you want some more information on those two central bank meetings. And that concludes today's morning call. Thank you, and we'll be back same time and place tomorrow.